TLTRO, repo, reverse repo. If you've not understood the RBI April 17th announcement, you're at the right place. This is a special series of Money with Monika in which I will decode and explain policy and events around COVID-19 as we go through the pandemic. I will, of course, take your questions. So, what did the RBI do? It did a number of things to improve the flow of funds and liquidity in the system. It reduced the reverse repo rate by 25 basis points. It has given an additional line of credit to banks worth 50,000 crores to lend to the MFIs and NBFCs through what is called the tltro 2.0. It has also given 50,000 crores to institutions like SIDBI, NABARD and NHB, which in turn will lend to small-scale sector, MFIs, NBFCs and the real estate sector. But what does TLTRO, repo, reverse repo even mean? Let's understand this a little better. Now, the repo rate is the rate at which banks borrow from the RBI, and the reverse repo rate is the rate at which they park their surplus funds with the RBI. Remember, the RBI is the banker's bank. Now, take an example. When you have excess liquidity, you park it with your bank and you get what is called the savings deposit rate, which is 4%. But when you need money, when you borrow from the bank, you're taking either a personal loan or a home loan, then the rate at which you borrow is always higher. It will be between 10 to 14% depending on what the rates are. So there is a corridor between what you borrow at and what you lend at. Very similarly, banks will borrow from the RBI at a rate called the repo rate, which is 4.4% today. Now, to incentivize the banks to lend rather than keep the money with the RBI has reduced the reverse repo rate, the rate at which the banks park their excess funds with the RBI, by 25 basis points. This has increased the corridor, the difference between the lending and borrowing rate, by about 65 basis points. RBI has done it because banks were using their surplus liquidity worth almost 7 trillion rupees as on April 15th through the reverse repo window to park their money with RBI rather than lend it out. So reducing the reverse repo rate is going to be enough? Clearly not, because RBI has also announced the TLTRO 2.0, the targeted long-term repo operation. This is nothing but the ability of banks to borrow at short-term rates for long-term purposes. When we borrow short-term, we will pay lower rates of interest than when we borrow long-term. RBI has given the facility to banks to borrow at the short-term rate, the repo rate at 4.4, but lend it for a period of 1 to 3 years. With TLTRO 1.0, it had already given banks about 1 trillion rupees to do this. Banks used this money to lend to people who already were fairly well flushed with funds, such as some PSU companies, AA rated paper from secure companies, basically with very good credit ratings, firms which can raise capital in other places as well. So banks were showing their unwillingness to take risk to lend slightly lower on the credit ladder for paper which is A or A minus, which is still investment worthy. But banks were not willing to take that risk and were parking that money, excess money, with the RBI. RBI is saying that we will give you another 50,000 crore, but this is targeted towards the NBFC sector and the MFIs. So if you are borrowing from us out of this window, you will have to lend to them. Why will banks do that? Because they stand to make a fat margin in the middle. They're borrowing at 4.4. The yields on this paper is anywhere between 10 to about 14%. So banks are going to make that margin. The difference between 10 and 14 and 4.4 is really what they stand to make. This has been the intention of RBI, to nudge banks to start lending. That extra 50,000 crore being given to SIDBI, NABARD, NHB is also targeting the small scale sector, the real estate firms and the NBFCs and MFIs, which really are getting the money to the last mile, to the people who really need the money. So why is RBI doing this? Because we are in a self-imposed coma. Firms are shut other than essential services. But even when they are shut, you need the oxygen of money to keep paying salaries, to keep paying rent, to keep paying for essential costs which must be met. RBI is hoping that if this liquidity reaches firms that need this oxygen of money, when the pandemic passes over, we will be able to recover much faster. Will it work? We don't know. Keep watching. I will update you on this as I find out more. Do keep asking. Write in your questions to me at moneywithmonika@livemint.com. Till next time, stay healthy and stay wealthy.